Bitcoin has added more than 5.3% to its market value, hitting a new near-term high of almost $30,000 after BlackRock and Coinbase have filed for the very first Bitcoin spot ETF. This is a pretty big deal and could revolutionize the crypto industry in the long term, as an ETF would give many investors and hedge funds access to Bitcoin and other crypto assets to a point they've never done before. And if you pair that with the fact that traditional incumbents like Citadel and Fidelity, who have shunned Bitcoin for many years now, have just launched their own very first crypto exchange, it goes to show you there's a lot more upside left in the crypto markets than many people potentially expect. Whether it be driven by the Bitcoin halving we're expected in 2024, new liquidity, or lower interest rates, the charts for Bitcoin and the overall industry look very bullish. Why exactly do I believe that? And what are the odds of BlackRock's historic ETF getting approved? In this video, those are exactly the questions we're going to address. So to start things off, let's give some context on where we're coming from over the past couple of months. As I'm sure you guys have heard, earlier this month, the SEC sued both Coinbase and Binance for violating regulations in their country that, as we all know, didn't even exist in the first place. The SEC essentially charged Coinbase of operating as an unregistered broker, clearinghouse, and exchange, which obviously Coinbase denies. Nothing serious has really happened from those allegations, but chances are if Coinbase and Binance lose these lawsuits, then the SEC is simply going to have the opportunity of issuing a hefty fine to both of these companies. And because most traders on Wall Street today tend to be more inclined to keep their money off the table in the midst of any regulatory backlash, Bitcoin saw its price decline by around 10% following those both lawsuits. That was until just a few hours ago. Bitcoin is now up around 5 to 6% from its closing low of 25.50, reaching its all-time highs over the 2023 period at 30K. This comes after BlackRock filed its ETF, and the edX platform, which is a joint venture between Charles Schwab, Fidelity, and Citadel, just got approval a few hours ago. And guess what? Not only has Bitcoin's price recovered to continue its uptrend of 2023, but for the first time in well over 2 years, Bitcoin's share of the total crypto market value is the highest in about 2. But for the first time in 20 months, Bitcoin's share of total crypto market value is at its peak. Near perfectly, Bitcoin's price bounced off the 23% retracement level from its lows earlier this year. That is a pretty big improvement from the price action we saw in 2022, where every rally was shorted and ended up being a bear market one. Not only are we above both the 250-week moving averages, but we are holding a very consistent and very strong uptrend on the daily time frame, which has yet to be rejected, signaling more strength is yet to come, even if we see any sort of pullbacks in the short term. And in my opinion, when things will get truly exciting is when we break above this 32,250 level, which, as you can see, has acted as a very strong resistance for quite a long time. Above that level, Bitcoin has a very easy run all the way up to 47,800 because we already saw a lot of liquidation and a lot of order book selling in the past May. And keep in mind, we're seeing all this strength even before BlackRock's ETF has been anywhere close to getting approved. It typically takes around 250 days for the SEC to go through the filing process and approve the listing of an ETF, which means by the end of the first quarter of 2024, we'll have some data on whether or not this gets approved, which coincides perfectly with the time we're expected to see the Bitcoin halving. And the best part about this is that we don't need to actually wait until the second quarter of next year to start seeing the real appreciation for Bitcoin and blockchain funds. As you can see, GBTC, which is the Grayscale Bitcoin Trust, has just seen its underlying Bitcoin holdings gap narrow to 37% versus 45% just 7 days ago. What this basically shows us is that there is a difference between GBTC's holdings and the actual value of the assets they're investing in, because of speculation that GBTC's trust is not going to get converted into an ETF. However, as clearly seen by this chart, that sentiment is starting to shift around rather fast. For those that don't know, Grayscale is currently in the midst of a high-profile legal battle with the SEC, where the firm essentially sued the regulator in June after it denied its own ETF application, primarily because it is a physically backed ETF, which should be much easier to approve. And like Grayscale has mentioned many times, turning their trust into a real ETF would solve a persistent problem for the company and the industry as a whole, which is obviously the discount between the net asset value and the fund itself. And that has all to do with the fact that unlike a traditional ETF, GBTC can't redeem shares to shift with fluctuating demand in its net asset value. That results in a big difference in the fund's own price and the investment assets underneath it, which obviously hurts GBTC itself and lures investors from not touching any sort of Bitcoin related fund. And the reality is that if BlackRock's application is approved, then there would be precedent to approve more physically settled ETFs and not futures or funds. And this GBTC news came right after we learned of a new crypto exchange going live, which is a partnership between Citadel, Fidelity, and Charles Schwab. This EDX Markets platform is going to be a pretty big deal for markets because it's the first time institutionally backed firms are coming together to launch their own platform in regards to what the SEC wants them to do. And why does that matter? Well, Coinbase and Binance, which are the OG exchanges, just got sued by the same authority that just approved this EDX Markets exchange, which means these guys are doing something different and they're falling right on the lines of what the government wants them to do. And it's pretty easy to crack the code as to why that is the case. Not only is the EDX Markets platform only going to trade Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, but it's going to be running a non-custodial model, which means that EDX is not going to be holding any client's digital assets. That basically means that this new exchange operates the opposite way of Coinbase, Binance, and even FTX, which obviously hold their assets on the balance sheet. Instead, according to the CEO of EDX, they're going to be using a third-party custodian who has not been yet named. Whether or not this new platform succeeds is a completely different story. But the reality is that some traditional financial institutions in America are officially starting to lay the groundwork to participate in the crypto markets. We did not see this action throughout last year or 2021, and it seems like the next bull market could be stronger than ever before given these events. For the first time, not only could we see price appreciation for Bitcoin and other assets, but there could also be real fundamental value created in the transaction and ledger of this very innovative technology. As usual, folks, let me know your thoughts on the situation down in the comment section below. Do you think this is going to be a successful strategy? And what's in store for Coinbase given this news? As usual, I continue to be an investor in this company because of the prospects around Bitcoin and its growth. But as usual, any comments are welcome. Thank you very much for watching, and I'll catch you guys in the next one. Take care.